And before we start, I'm going to share, share one more screen of our disclaimer. Sorry. So this is our option hotline disclaimer. Please read it carefully. And back to our webinar. Okay, Steve, are you with us?
I'm here. Steve, how are you? Very nice to be with everybody.
Very nice to have you. And before you start, Steve, our founder and CEO, Tom Smith, wanted me to give you a very special welcome from him as well. He couldn't be here right now, but he asked to pass forward that we are so excited that you're giving this webinar today and very excited to have you give many more in the future. So Tom just wanted to reach out and thank you very much and send his best wishes to you.
Well, thank you and wish him the best as well and hope to speak to him soon.
Great, will do. And the floor is yours if you want to take over the screen share.
Well, thank you, everybody. My name is Steve Kalayjian, and this is a great privilege and honor for me. A great firm, Options Hotline here. I've known them for many years. A little bit about myself. I've been in the industry now for 38 years. My specialty has been day trading, options, equities, ETFs, index futures, foreign exchange, you name it, I've done it. In my career, I've traded nearly 2 billion shares in my life. My first trade I ever did in my entire life was an options trade. And the funny story goes like this really quickly is my father got a D in economics and my father said, that's it, you're going to get a job on Wall Street. I got a job the next day. And after about 3 months of working on the American Stock Exchange trading floor, I went from a backup specialist clerk to a specialist clerk. And I used to hear, the options market. And right behind me was a stock called American Can. So I opened up an account with $3,000. I remember, obviously I was making $2 an hour back then. So 1,500 hours of saving $3,000 was all I really had. So I don't know, I just decided to buy a Fed 50 call, 5 contracts at 2 3/4. So I used up practically half my money in my account. And I watched the stock go from 50 down to 41 in the next 3 months. It was October when I purchased that. And I bought all the way down. And about a week before expiration, or right around Christmas time, that was December, I still had about a month and a half left on my options. I remember they were trading about $0.125 of a dollar. And so I just thought about the 1,500 hours I worked, and I decided, wow, this is crazy. I just can't believe I blew all my money. And my Christmas.
Hey, Steve, if I could interrupt, would you like to share your screen with the presentation?
Yeah.
Right. Yeah, we're
so
not seeing it yet.
Yeah. So, sorry. Sorry about that.
Okay. Quite all right. Yep, I saw it for a second. Yeah, there we go.
So anyway, so about a week before expiration, the stock runs from 41, and by the end of the week in expiration, the stock ran about $11, $12, and around 3:45 that day, I sold my options, and I made about $1,800 after losing practically everything. My father comes over to me as I'm hanging up the phone to sell it. I see the broker walk into the crowd and sell my 15 or 18 contracts or whatever I was on, 20 options contracts. I hear him say, sell them, boom. And my father turns around and says, are you out? I said, I'm out. And he said, what'd you learn? He said, well, when I came on the floor of the exchange that morning, he found the pennies faced up that Monday, my father. and he made a wish that I wouldn't lose any money. So my father said, well, what did you learn from this experience? You went from 3,000 down to zero, from zero up to 4,800. You made $1,800. What did you learn from this? I said, I guess whenever you have a losing trade, you look for a penny faced up. Well, I thought my father was going to actually kill me in saying that. He said, no, you never average down. So that was my first lesson learned about discipline and preservation of capital. Years ago, I decided to, when the exchanges went decimal, I decided to take a year of my life. That 1 year took me about 9 years of my life to build predictive analytics. I wanted to be able to read the market and have analytics before my eyes that will enable me to gauge market direction that I could take advantage of in trading. Again, I was, from the period of 91 to 2001, I had a staggering career in the markets, day trading, and I spent 9 years thereafter building analytics and then working at different prop and hedge funds, and more or less working with a lot of top individual customers. In 2016, I decided to build a company where I wanted to be able to teach people what I built and build a platform for the masses so they can learn, predictive analytics and technical analysis in a way that I felt was very important to see things as trending strategies, reversal strategies, correlation strategies, and divergence strategies. And so I have a gigantic room of people from all around the world, per se, and they are in there every single day, 8 hours a day, and we are just moving the needle, seeing things like, and being able to use the same analytics that I have and use that they will have access to and they use. So, so with that, let's see what we're going to discuss here. So these again are the five. The methodology here is alpha driven. Now I also do intermediate and long-term ideas as well. My 5 keywords are very, very important. Is consistency. Without consistency, there's no tomorrow. There's discipline. And I just gave you the example of the option trade that I had zero discipline, no stops, no preservation of capital. I had no regard for my money. The third word is confidence. The confidence I instill in people is me working with them day to day, but also gives me the ability to teach them the analytics that I have and that they use to see things dynamically right before their eyes, so it's right there before them. And then the passion to do this every single day, and then the patience to wait for setups and for patterns to kick in. I do look at in the market, like I stated, trending strategies, reversal strategies, correlation strategies, and divergence strategies. You'll hear me at times during my live session, I have a complete different terminology based upon my analytics. You'll hear me say a double blue or a double red, and these people know exactly what I mean every single day. This is constant repetition. These patterns repeat themselves on a daily basis. So I have 38 years, well, this is 36, but 38 years experience in the markets. You can read here, trading nearly 2 billion shares in my life. It gives me great joy each and every day to wake up to help people across the world in in high alpha generated ideas. These are not like 1 second trades. These are trades that last, or trends that last anywhere from 40 minutes to 5 hours in the day. But being on the right side of the market is the most important thing. There's mathematics. I use it in a way that there is no guesswork. And that is the importance. And that is what I have instilled in thousands of our users on a daily basis, to be able to take advantage of things without any guesswork. Boom, see it, boom, indexes. You trade the weekly, at the money calls or puts without the $25,000 restriction, and you're seeing people moving them, trading these in options in such a way that just not only on the indexes, but whether it's the big cap stocks like Nvidia, Boeing, Netflix, Apple, Facebook, the ETFs. I stand in a room with over 40 screens. I was given a gift from the good Lord above. I can see things like that, and the mathematics and the algorithms that I have written show me which way things are going, and taking advantage of these great patterns on a daily basis. Again, these are my 5 key words. Like I said, consistency, discipline, confidence, patience, and passion. I have an unbelievable story for consistency, an unbelievable story for discipline, which I just told you. The confidence level, without my analytics, I would never be able to look at the markets the way I've been doing so. If you just threw up a Yahoo chart or a Bloomberg chart with certain studies, I would never be able, and I'm going to show you why. The patience to be able to let these patterns set up and then take advantage of these patterns, and then obviously the passion to do this on a daily basis, which really, for me, everyone I deal with, is all they want to do is learn, trade, and do it right and conquer this. Where people are saying this is the hardest thing in the world to do. Well, I want to make it simple, and I do make it simple for everyone who is part of my group each and every day, from a beginner to intermediate to the most advanced hedge funds guys in the world that I've taught, and trust me, I know them all. So basically, I've shown them things that they're like, whoa, I never even looked at it like that. So again, been given a gift, and now my gift is to give back to all of you, to be able to make this such an affordable journey, and I want to accelerate the journey for all of you in the right way. So let's start with looking at the S&P futures. And I know a lot of you, this is not about futures, but this is about using the index options to be in a situation to take advantage of the trade. So right now we look at the S&P futures. I do look at multiple time frames. You can see I look at the 15 and the 5-minute. Now, one of the things, again, this is my own analytical charting app. No study can be added and or deleted. I teach exactly the pattern. I explain the numbers to the right, how valuable they are, what they are, and how we use them. And one of the things I will tell you in the 3 sessions that we have in the world, the US session, the Tokyo session, and the European session, that if you're going to trade the underlying spiders, QQQs, the Russell, IWMs, TNAs, the TQs or the Qs or the diamonds, you need to understand that the math is completely different on the futures contracts than the underlying ETFs. The futures contracts trade over 23 hours in a day, where the underlying ETFs trade 6.5 hours in a day. And what I try to explain to everyone is, if you're trading the spiders, you need the underlying S&P futures during the US session. If you want to trade the Tokyo session or the European session, you're more than happy to just go trade them on their own during those sessions. But we're talking the US session, and the math is completely different. So basically what we're looking at here is, again, the 15 to 5-minute time frame on the S&P futures. Indicator 4 is my own predictive analytics. So I'm actually getting a buy signal on the S&Ps, which ran about $2.50 on the spiders on this move. And this pattern right here on this pullback, and I'll show you here on the spiders, because you can see that the S&P futures on this pattern here went bullish around 10:30 in the morning, or 11:30, about 11:30 in the morning. And if you look at the spiders, which then correlated to the underlying S&P futures on the 15-minute time frame. So now everything lined up perfectly. So now I use the smaller time frame, the 5 and the 3-minute time frame, for entries and exits. This oversold condition, beautiful pattern here. You can see that it ran north of $1.30 on this. So normally my trades last anywhere from 1 to 8 bars. This is a beautiful divergence pattern, using my indicator 3, my oversold overbought oscillator, into a normal MACD positive, yellow over blue. I say positive. Again, the terminology is different, but more so when the spiders on the 15-minute time frame correlated with the S&P futures, we then used a smaller time frame to buy the pullback, and you can see the reward that we got in doing so. Again, indicator 4 is my own predictive analytics. Indicator 3 is my own overbought oversold oscillator. So I waited patiently for the pullback on the 5-minute. Bam, was able to get in And you can see 1, 2, 3, 4, 5, 6, 7, 8 bars. Again, the trade should last anywhere from 1 to 8 bars, 1 minute to 40 minutes, on a 3-minute time frame, 1 minute to 24 minutes. So again, a great pattern. Again, was another buy here on the 5-minute time frame that we were able to take advantage of. But the first pullback, when this happens, when they correlate, is going to be your best pattern, where then you can really take advantage of the options market, get involved, be able to really size up the position, and they're going to go tick for tick on the weekly calls in this example. And if you look here on the S&Ps here, we're seeing a sell correlation, right? You can see indicator 4 is negative here, and I got the overbought level on the 15-minute time frame. And if you look here on the spiders, well, the spiders now then correlated with the S&P futures, and we were able to short the first bounce, and you can see the $1.50, $1.60 drop. Now these patterns happen all throughout the day. Okay, there's never a day where things are stagnant and things don't happen. Things do line up, whether they line up for bullish trends or bullish reversals, and or the inverse of the sell reversal or the sell trends. Okay, so with that being said, what we're able to do is wait patiently for the markets to give us a direction. Now, again, this short here on the opening, right after the opening, we actually called based upon a sell divergence using indicator 1 on the 15-minute time frame. And what we're able to do is then we're able to take advantage of this almost $1.75 drop on the spiders, and then waited for the first bounce once we got the correlation to sell on the spiders on the 15 that correlated with the underlying S&P futures. Now this is the SDSs, which is the Pro Ultra Short. This actually was telling me even more confirmation that the buy on the 15-minute time frame on my indicator 4 was giving me the ability to see the buy reversal on the underlying Pro Ultra Short. This is the first pullback on the 5-minute time frame, which then gave me the ability to recognize, hey, the spiders are S&Ps are a monster short. Let's take advantage of this, whether you're shorting the S&Ps, whether you're shorting the spiders, or whether you're selling or buying, selling calls or buying puts in the index weekly options. So again, very important to identify this. Let's look at coin. Again, so many different names that we look at throughout the day. And you can see here that I got a big buy reversal on coin on indicator 4 on the 15-minute time frame. Coin, we actually grabbed this and it actually went significantly higher. I think it traded about 247 on this. And you can see that we waited patiently. We actually were telling people to take a scalp short on this here above the 244 because we were looking for the pullback. It did drop $4, and then the oversold condition into the buy divergence here. And I believe coin on this pattern, basically, again, mathematics has told me that the trend reversed on the opening and that we were now buyers into weakness. That's exactly what happened, taking the scalp short, looking for the pullback, and then going long, and then moving up. I believe it ran about $6.5, $7 on coin. Again, trading the options market in these trades normally lasts, I said, 8 bars, 1 to 40 minutes. So with that, coin did push up, I think, above the 46.5, 47. But still, as it's pulling in, you could be accumulating an options position in this to the point where we are now looking for a monster. This is a monster buy divergence here using my indicator 3 with indicator 1. This is a weighted moving average, so I see the price action a little bit above where the moving average is, which is beautiful. And we got this really big push up about $6.5, $7. So again, being able to identify these patterns and taking advantage of them throughout the day. Here's NVIDIA. Now, this is a buy reversal strategy. When I look at the markets, I do look from left to right. And what's really super important, you can see that indicator 4 now is correlated with indicator 4 on the 5-minute time frame. So the 15 correlated with the 5, and you can see I use indicator 3 for the pullback here, and I wait patiently for the pullback and then for the push up. So you can see NVIDIA ran about $5 from 1, 2, 3, 4, 5, 6 bars. Normally the average is about 5 to 6, where we look to start exiting positions or raise your stops or raise your target. However, NVIDIA did prove us to be right. It ran roughly about $5, $4.50, $5 here on NVIDIA. So again, a great pattern. You'll hear me say, hey, NVIDIA, big buy reversal. Let's look to buy the first pullback on the 5-minute time frame after the 15-minute time frame correlated with the 5-minute. So everybody in my room for the first day or two thinks I'm talking Chinese, but by the third and fourth day, it all comes together. It's terminology that no one's ever heard before, but 8 hours a day, if you're in that room with me, and we have so many people, and the fact that if we, I answer every question. I give people my personal cell phone numbers. I am very transparent. I believe in that methodology. I don't believe in being untouchable. I believe in helping others to the point that they eventually get it. I actually invite people into my room for free so they can learn if they're local. I have a person fly in from Florida. I have people flying in from around the country. So again, it's really about understanding and learning the proper way of identifying the pattern, the strategies, and then learning how to size up the position and how powerful that that trade will happen. I will tell you 94% of the time that when you get a buy like this and the MACDs are below my pivot line, the 0.0, and the first pullback on the 5, you're going to make new highs. And that's exactly what NVIDIA did. So you're going to make new highs here, and we're going to, identify this in a way. And here's Tesla. We did catch on this day, we did catch a really good sell divergence on Tesla on the 15th. But once the 5-minute time frame reversed negative at 9:45, and then at 10 o'clock, the 15-minute time frame correlated with the 5-minute. We then were able to capture the short around above the 663.5, 664, and you can see the $8 drop in Tesla in a matter of 25 minutes. Monster short on Tesla, and we were able to identify this short based upon my analytics. Without these analytics that I spent 9 years of my life building, I would never be able to see the divergence pattern on Tesla. I would never see, based upon the mathematics I created, to be able to see the shift in the trend and to get a sell reversal, and then look to short the first bounce after we got the sell correlation. So the 15 then correlated with the 5-minute, and we were able then to take advantage of the short in Tesla. Here's Facebook. Again, we can see the algorithm went negative on indicator 4, and we then waited patiently. Sometimes you'll hear me say, based upon a buy divergence, we're going to look to buy and then look to short, waiting for the bounce. So there might be times where we may actually go long, looking for this bounce after they correlated. You keep tight stops in, but the real trade is the bounce off the 5-minute time frame. That's exactly what happened in Facebook, and you can see the drop in Facebook was about $1.30 on Facebook. So again, being able to identify the trade, being able to be on the right side of the market, and being able to identify the pattern in a way that we're able to then utilize the options market or short the stock in any capacity, and then be able to understand that the probabilities are high that this pattern is going to be correct. So if it wasn't for my indicator 4, my indicator 3, and the way I have everything set up on my charting app, I would never be able to read the market if I didn't have everything lined up in the proper way. Here is the TQQQs, monstrous. They move like, between the TQQs and the TNAs. They are monstrous, monstrous vehicles to trade. So you see here, the 5-minute time frame, I went positive, meaning bullish over the 5 and the correlated with the 15. So this is where you'll hear me say a double blue or a double red, like in Tesla before or Facebook. So the 5-minute time frame now correlated with the 15, still very bullish because of the indicator 1 on the 15-minute time frame. So what do? Right? We actually tried to, I think we missed the short on this one, looking for the pullback, and it did drop about 70, 80 cents, but so what? The real trade was to go long on the 5-minute time frame using indicator 3 to get a deep oversold condition. And you can see that that Facebook then pushed up about 80, 90 cents. I think it traded above 101. I'm sorry, the TQQs traded above the 0330 that afternoon. So quite a big move. Just captured the pullback here on the TQQQs on the double blue buy. Again, the terminology, people understand it, not the first day or the second day, but the third, fourth, and it just kicks in. I actually have people in my room actually saying, hey, let's look at Boeing, double red short, let's look to short the first bounce. Boom, everybody's on board, whether it's in the options market or the actual underlying security. Here's AMC that we nailed this yesterday on this one. We saw the beautiful buy reversal on AMC. You can see that everything was flowing properly. When AMC was pulling in here, we had a nice buy range to get long, and you can see that AMC really propelled upward at about $5. Even if you took it 1, 2, 3, 4, 5, 6, 7, 8. It doesn't make a difference, 5 to 6, $7. You just keep raising your stops or kicking out the long, but keep raising your stops along the way. Okay. And here's plug. This is another one that happened a couple of days ago. Indicator 1, MACD negative, blue over yellow above, and you can see the algorithm is negative. The 5-minute time frame, I was able to get the sell that correlated with the plug, and you can see the 5 correlating with the 15, and this was a really great short on plug. Dropped from 31.88, I believe, and it dropped about 60 cents or so. Beyond Meat, again, we can see the trend is negative on the bigger time frame. So when it comes to stocks, I look at the 5 and the 15 when on the time frames, and when it comes to indexes, I do look at the 3, 5, 15, 30, and hourly. Mean the S&P futures, the NASDAQ futures, the Russell futures. I don't look at the YMs that much, but I do look at the diamonds. And on the individual stocks, I do look at the 5 and the 15. Why? Because if I see a negative pattern on the NASDAQ, I look right to Facebook, Nvidia, Amazon, all the big names, and I look to see if that pattern is there, and 90% of the time it mirrors the index, right? So that's why I don't have the 3, 5, and 15 looking at it. I just look at the 5 and the 15, and I do use the smaller time frames for entries and exits. And to be able to identify when I'm putting a short on, the first question I'm going to say to myself, especially in Beyond Meat, is when I'm shorting this, am I going to make a new low or a higher low? And if I'm or if I'm buying, like Nvidia, and I see this great pattern, an indicator 4 on the 15 correlating beautifully, is Nvidia going to make a new high or a lower high? So those are the real things you got to ask yourself. Once you identify the pattern, then to be able to identify which way the markets are going. This was a great short here on the TNAs. Again, left to right, you can see I'm in a negative trend. I waited patiently here on this push up. And again, I have stops mathematically placed. So these orange numbers, I will know exactly where there's a shift in trend on each time frame. So all the numbers to the right have significant meaning, and I'm able to see things like that to be able to identify where the market's going to break down or where the market's going to reverse to the upside. In this example, I was able to identify the trend negative. I waited patiently for the 5 again after getting the sell divergence off the 15, capturing the short, dropped about $1.20. But then again, another great pattern, The 5-minute time frame got the sell correlating with the 15. We waited patiently to get the bounce on the 3-minute time frame, or the 3 and the 5, and you can see the drop almost 90 cents. So we caught the short here. We were able to capture the short here on the double red sell condition. Netflix, you can see here the 15-minute time frame. I got the sell reversal, negative MACD. We waited patiently for the 5-minute time frame to work off the oversold condition, and you can see the $4.5, $5 drop in Netflix using the 5-minute time frame. Again, very important to be able to look at multiple time frames, to be able and then use the indicators properly and be able to see using my overbought oversold oscillator to be able to know exactly where I'm thinking based upon where the weighted moving average is, the orange dotted line, to be able to then be able to look to be able to take advantage of price points of entry for shorts and or longs. Roku, we had a gap down here, 945. They got the sell reversal, and Roku never looked back. Roku never looked back. Deeply oversold. You could be deeply oversold, 100 points. It doesn't make a difference. But right from the get-go, I was able to identify, and yes, there were a bunch of bounces. I believe this was yesterday in Roku above the 54, 55, 56 level. We took advantage of 2 or 3 great shorts in Roku and eventually pushed down below the 344 yesterday in Roku. But again, making an understanding and learning that we're identifying the trends, we're identifying the patterns, we're teaching constantly all day long on these market directions, market moves, and being able to identify this. Again, you know, this is a great privilege and a joy for me. I want to just say thank you. It's 30 minutes. I don't want to go more than that, but I will take questions. And we're able to give away a free identifying positive negative divergences. That's a monster course. It's valued at $300, and I make it very affordable for everyone. And you know, basically, I love doing what I do. I love helping people each and every day and changing lives. And I'm here every day from 8 to 4. So if anybody has any questions, Steve, thank you all for listening and again, being part of a great company like Options Hotline.
Thank you, Steve, very much. We did have a good, robust audience. We have a few questions. And again, everyone that is on the line, please put your questions in the Q&A box. I'm going to start out with a couple that are currently in there. And the first is, actually, I want to ask one of my own first. I'm kind of a political junkie. And could I just, in general, ask you how your trading is affected by the ever-changing ebbs and flow of the federal government?
But you can't overthink things like, you know, the Federal Reserve comes out today and, they're talking about raising potential interest rates. You can't, there's an old saying, when you think you stink, and you can't start overthinking things. You'll just be frozen. The patterns would be the patterns. When they push down, the first bounce was a great short. S&P's got up to 16 and a quarter. All the stocks had the identical, Nvidia, everything, Facebook, everything dropped after that. They ran from 90 up to 20, up to 15. They dropped and they ran 25 and then dropped 20. And then again during the press conference, he realized what's going on with the markets and he toned it down a bit to give calm to the market. So I don't really analyze. I just let the dust settle and then we attack, right? And we wait. Being a day trader, you got to be able to take advantage of volatility. And for the last, God knows, weeks, it's been pretty good on the opening and then dead till about 1:30, 2 o'clock every single day. And then it picks up. I don't want to overthink things and let people get into that mindset. The mindset is to be consistent each and every day, to be able to identify the trades, the patterns, do right, and see them for what they're worth each and every day.
Super, thank you. Okay, another question from our attendees. As we are just on the verge of Q3, do you see any major investing themes that may play out in Q3?
I really don't know how to, basically, the government is just pumping money into the system to try to get everybody, back to where we were pre-COVID per se, right?
Mhm.
If it wasn't for the gigantic stimulus packages, which has propelled the markets to these levels, without government assistance, I'm not a believer in government assistance in that capacity. I believe markets should be free, and I believe that the market should just be able to trade naturally without any Fed interference and or market um, commentary that's going to give it a boost or a stimulus per se. I've been doing this for 38 years, and it was like that back in the day, but like M1, M2, and things like that, and never really where everybody's eyeballs are on the market per se. Um, Again, every single day we just look to come in and take advantage. The news is going to be there, so be it, but we're not going to overplay it because, I'm not going to say, hey, well, I'm bearish on the market. We have $29 trillion in debt. And guess what? I think we're going down, but yet the Dow could print 38,000. I'm getting killed on the upside. So I don't teach the people that are with me to think outside of the 8 hours that we're there every day into intermediate term. I do use bigger time frames, the daily and the weeklies for intermediate and longer term ideas. And so we're able to pick up big buy opportunities off these bigger time frames and sells as well as well. But I don't get into the mechanics of, you know, trying to talk about QE and sell them A and go away and all this nonsense. I tell everybody that we're like doctors, right? Let the chart tell us exactly what's going to happen. Let the chart tell the doctor which way the doctor should go.
Great. Thank you for that answer. We have another question here from a gentleman by the name of Philip, and it is a very technical question. I will do my best to read it accurately, but it is quite a mouthful here. Okay, so the question is, if you have negative on indicator 4, 5/15, and negative on indicator 1, 5/15, but indicator 3 is oversold on the 15, but more on the 5. Does this mean you will get a bounce before a short?
Yes, the answer is yes. I would be looking. It depends when it happens. If it just currently happened and you're deeply oversold, I will look. I'm not shorting on the lows. I will wait patiently to short somewhere where the somewhere where the moving average comes in, or I will wait for an overbought reading using my oscillator to start getting short.
Got it. Glad you understood that. I did
I
not.
did. That was a great question, actually. He actually worded it very well.
Great. Thank you, Philip, for that. And unless we have anybody that wants to toss in another quick question, that does it for our questions. And so, Steve, we will wrap up here. Any parting comments you'd like to make before we
Like
close
I
the
said,
webinar?
I'm very transparent with people. I talk to people all throughout the world. People have my personal cell phone numbers only because, I like to get to know them, where they are in the process. Are they looking? I want to be sure I'm the right person to help them. I don't care if you're a beginner. I don't care if you're in the game, if you're struggled. I help correct your mistakes. I help teach you the right way. I'm helping you learn strategies that I have seen work for others, myself included, to be able to move the needle in a way. So with that, it gives me great joy in doing this each and every day. And I'm there for you. I don't hide under a rock. For me, people are like, "Well, I can't believe I'm talking to you." I'm like, "No, don't be like that with me. No, I'm here to, learn, teach you what I have studied, and I want to. It's a transfer of knowledge to you. And all I ask of you is give me your all, and I will prove it to you."
Fantastic. We appreciate the real down-to-earth commentary there. So that pretty much wraps it up. We thank you to all the participants who joined us, and please head to Option Hotline again. Steve will be continuing to add a lot of content to Option Hotline as well as his own products. We greatly appreciate everyone that has joined us, and please come back next Wednesday at this same time for another webinar. Steve, great job. Thank you again, and we
Thank
look
you,
forward
Steve.
to seeing you here again soon.
Thank you for the opportunity. Everybody have a great night.
Thank you. Take care.